Hi, good morning, good afternoon, good evening, everybody, depending where you are in the world. You'll probably recognize me if you were attending the last session, but just in case anybody did not attend the last session and have just joined us, my name is Kevin Ballard, and I am co-founder and CCO of Block Asset Management, manages the world's first digital assets fund of funds, blockchain strategies fund, and a wealth tech 100 company. We're proud to be sponsors of Incrypted Asia, and I look forward to making some new contacts today. Please contact me using any of the details that you have. I'm pleased to be moderating this session today with a selection of excellent fund managers. I can confirm that the 3 fund managers joining me today have all passed Block Asset Management's stringent due diligence. This fund managers roundtable will discuss the identification of opportunities, the achieving of diversification, and the management and risk volatility controls. So firstly, can I ask Désirée just to introduce yourself and your fund, and thank you for joining us.
Sure. Hi, everyone. I'm very happy to be on this conference today. My background is traditional finance. I studied banking and finance and was active as a fund manager on European equity funds for many years. 3 years ago, I launched a crypto fund together with my business partner, Reto Stifler. Our fund is based on fundamental analysis and it is actively managed.
Excellent. And could I pass over to Daniele? Could you introduce yourself and your fund, please?
Okay, sorry. I'm Bernardi. I'm the CEO of Diamond Group. We are a group of company actively managing in the finance, investment management company and the crypto also space. We have an alternative investment fund in Europe, Europe regulated fund of fund, basically, in crypto assets. And we also manage a Cayman fund.
Perfect. And finally, and certainly not least, joining us from Australia, where it's past 10 p.m. So I feel for you, Tim. Would you like to introduce yourself and your company, Tim?
Yeah, sure. Thanks, Kevin. Thank you for having me. Tim Johnston's my name. I'm Managing Director of Apollo Capital. We have a similar style to Désirée. We manage the crypto fund based on fundamental analysis, and it's an active management style.
Excellent. Right, let's dive right in. So the obvious question the audience are probably thinking is, why use a fund manager rather than investing in or holding digital assets directly? And of course, chivalry is not dead. Désirée, ladies first. Do you want to take to the floor?
Sure, thank you. I think it makes sense to invest through an active portfolio manager in the crypto space because, first of all, the ecosystem is growing at a very fast pace, and it takes a lot of resources and time to be on the pulse of time, to try out all the different platforms, to make mistakes, to learn, and to keep a good overview. And I also think trading, and especially also storing and other technical things are very difficult for many private people, and it's better done by a professional. So I also think that developments in the space are so quick that the biggest tokens of today are not the same as the biggest of tomorrow, and therefore an active management approach makes a lot of sense in my opinion.
I'm just going to open the floor, guys, so feel free to discuss if you haven't jumped in. Anyone else got a view?
Yes, from my point of view, we work in finance a lot of years, and always where there is returns, there are also risks. And in the crypto space, there are very high and huge return, but there is also a lot of risk. And so if the people is not expert, it's better to invest in a ISIN code in a traditional way and let the fund manager taking care of this kind of risk that is not only volatility, but is also the custodian, the diversification, the manage the opportunity. So can seem so that purchase the Bitcoin or other crypto assets can be performed very well, but if you don't manage the emotion, probably is definitely better to use a quantitative or a fundamental fund that make this for you.
Okay, excellent. Tim, anything to add, or do you want me to jump on to the next question?
I was just going to say, Kevin, quickly, it probably depends on the sophistication of the trading style. I think if an investor wants to buy and hold Bitcoin, it's relatively easy to do that nowadays. You need to trust the right exchanges. But as soon as you get beyond holding Bitcoin and Ethereum, as soon as you want an active, diversified portfolio, all the points that Désirée and Daniele, I think, are perfectly valid. And then I think it makes sense to invest with a fund manager.
That leads me nicely, actually, and we'll probably stay with you then, if that's okay, Tim. In that, how diverse is the digital asset space? You've mentioned that it's more than just Bitcoin. You mentioned that holding Bitcoin and holding Ethereum might be quite straightforward for, say, retail investors or for any investor wanting to manage their own assets. But as an asset manager, how diverse is the digital asset space? Do you feel the need to diversify? And how do you achieve that?
Yeah, so that's an interesting one. It's very diverse. I think I often check CoinMarketCap, and I think according to CoinMarketCap, there's now 8,000 crypto assets. Our fund is invested in 20 to 25, so that suggests that we're highly selective. So I think incredibly diverse and often a minefield. I'm sure many people active in crypto, even for as long as we've been in the space, you still get approached by investors and say, "Have you heard of this coin?" or "Have you heard of that coin?" And often the answer is no. Incredibly diverse, and I think you need to be very selective to get exposure to the best assets.
Excellent. Désirée, having worked with yourself and your fund for quite some time, I know this is an area that you specialize in as well, and the deep dive and research. So what's your view on this?
Yeah, I totally agree with what Tim just said. It's around 8,000 tokens that are being traded, and they have very different characteristics. Us, for example, we can invest in the most liquid 50 tokens, and we differentiate them into store of value tokens, currencies, and securities. And depending on these characteristics, we value them differently. And in the end, we buy around 10 different tokens into our portfolio. I think these are all still very young projects. This crypto world is still at the beginning, and therefore you can compare these projects with private equity or even venture capital investments, except for the difference that they are more liquid, or they are liquid, but one out of 20 will be successful, and therefore diversification is very important, in my opinion.
Excellent. And Daniele, from a quant perspective, what's your view?
And my view is that it's not only important to diversify internally in the crypto space, but the really diversification is to introduce a crypto investment in the strategic asset allocation of an investor, because the correlation of the cryptos, independently which one, is practically zero with the other asset class. And the real advantage of this is that you can increase the expected return without basically increase the volatility if you keep the percentage of this investment between 2 and 5%. So this is a really interesting diversification that the investor has to take care in their own portfolio.
I might just add one more point, Kevin. The correlation between crypto assets. I read some research the other day that the correlation of other crypto assets, and this is very broad, is about 90% to Bitcoin. But importantly, I think that it's going to change over time. We've seen this year the Bitcoin dominance fall dramatically from about 70% of total market cap to, I think last time I checked, it was about 55. And we think that'll continue to be the case as the space matures and evolves.
Okay, again, that leads me quite nicely then into the next topic, really, is that you're talking about the fall in Bitcoin dominance. How do you spot opportunities within the asset class? And surely there is more than just the technique of buy the dip or buy the pullback. So how do you spot opportunities in the asset class? Now, I'll open the floor to anyone.
So if I may follow on what you just said about the Bitcoin dominance, actually we made quite an interesting comparison to the traditional world. We see Bitcoin as the digital gold, as a store of value. And as you correctly said, it has around 50% of the entire market. And when we compare it to traditional gold, compared to equity markets, it is only around 10% of equity market overall. So we think a similar trend will happen in the crypto space. So in the end, Bitcoin in 5 or 10 or even 20 years will probably only be 10% of the market. And for us, the smaller the Bitcoin dominance, the more Bitcoin we probably hold in the portfolio, and the higher it is, the more we allocate to altcoins. And we discover opportunities by applying our fundamental valuation methodologies. This is especially interesting for the security token space, where we see lots of interesting developments, because there we have tokens that act like equities. They pay dividends, they make share buybacks, and because there are cash flows, we can also apply traditional valuation methodologies like a PE ratio, and we find really interesting projects at PE ratios of 15 or 17 for next year, compared to the traditional world where Nasdaq stocks trade at PEs of 30 to 40.
Wow.
For us, Kevin, in terms of spotting opportunities, we would most likely think about that in terms of the next sort of crypto asset to invest in. So we've got about a 30% allocation to Bitcoin, Ethereum, and it's very unlikely we're going to sell out of those positions or reduce that weighting drastically. So for us, crypto assets, blockchain technology, it's a fundamental breakthrough in computer science. And so what new applications and what new assets are going to appear that make sense and can accrue value. And we've seen a big change in that. In 2017, there was a big ICO boom. All these opportunities came out of everywhere, and everyone was raising money through the ICO process. But really, over the last couple of years, that's changed to, I guess, more closely resemble venture capital. So they're private deals, and by investing in an actively managed fund that has a good reputation and a good network, you can leverage that network into these private deals, which the individual investor is probably not going to even hear about, let alone get access to.
Excellent point. Totally agree. Daniele, anything to add?
No, the opportunities we take with the development of the quantitative methodologies, because we are basically a trend following fund, and so we try to understand which are the crypto that are performing well in the range of the first 30 crypto, because going to the smaller one in the smaller capitalization could be a good opportunities, but there are not a lot of liquidity there to manage a fund right now. Maybe in the future could be.
Okay, I guess the next question then I'll keep you, Daniele, because maybe this is something that is more apt for you than the previous question, is that how do you manage the risk and the inherent volatility that exists within this asset class?
Yes, we basically we have 5 quantitative models that decide every day if enter or exit for each crypto that we have in portfolio, and this allows us to enter and exit from the market, reducing a lot of the volatility. Of course, a bit of the performance, but the performance is huge. It's better to control the drawdown. Last year we cut the volatility of 50% and the drawdown of basically 66%. So the Bitcoin and cryptos lose the 60% in March, and we lose the 18% in the same period. So we work principally to reduce the risk to the clients, especially looking for the next year when probably return another crypto winter like in 2018.
Well, I'll come on to that one. So that will be later on to close. I think we'll discuss that further. Désirée, anything to add with regards to managing the inherent volatility?
So, I mean, the best risk measure for us is sticking to our valuation methodologies and to our price targets. We also have maximum position sizes that we keep, for example, for all tokens except for Bitcoin. The maximum is a 30% allocation for Bitcoin.
Sorry, Désirée, was that 30%?
Yes, correct.
Excellent, thank you.
And volatility doesn't necessarily need to be negative. For us, we use it in a positive way because when our tokens in the portfolio go up a lot and even shoot over the price target, we cut the positions and we build them again when the prices decrease. And herewith we can take out a lot of volatility out of the portfolio. And what we also do in volatile markets is we use arbitrage trades. For example, right now, the Bitcoin June future trades at a premium of 6% compared to the spot. We buy the spot and we sell the future, and we can lock in the 6% premium at very low risk. And we have more market neutral exposure.
Excellent. And Tim, I'm sure you have a similar response.
Yeah, it is similar, and I guess we can talk about risk for a very long time in crypto markets, but I guess the key point I like to make is we embrace the volatility, and we think it's really more of the responsibility of the investor, and that comes down to position sizing within their their allocation to crypto asset within their broader portfolio. So if their allocation to crypto within a broader portfolio is 50 basis points, 1%, 2%, that volatility is less, or they're less sensitive to that volatility than a 20% allocation, which even for us being bullish on crypto is optimistic.
Okay, let's lead on to lifespan and cycles and the cyclical nature of the asset class. I mentioned before that I'd come on to this. I think it was when Daniele was mentioning the potential pullbacks. So if we look at the market in its history, we've only got a short history to measure here of digital assets, a maximum of sort of 10 to 12 years, shorter maybe on the fund side. So it's clear that the market is cyclical. How do you as fund managers approach the end of a bull cycle? I mean, there's no doubting 2021 has been exceptional, but when will the bull run end? When do you see that happening? And what do you do as fund managers to protect the gains made? I open to the floor.
So then I start. Currently, we still see a lot of inflows in our fund, and interestingly, it's from more professional investors like family offices and asset managers. Actually, only smaller investors that started investing at the very beginning 2 years ago start to redeem some of their positions after fantastic gains they have made. But the big ones, they just now join the market and they join with small sizes and increase them. The biggest ticket we have from one single investor right now is 10 million. So the ticket sizes are getting bigger. The fund itself has assets under management of $100 million. And as long as we see this continue, we think we are not at the peak yet. And I think also banks and even pension funds, they will also join, but at a much later stage. But still, I could imagine that we will see the hype again and the top of the market probably already next year. And what we are doing is we move more of our allocation into the market neutral exposure over time, as I just mentioned, for example, with arbitrage trading, which still generates returns of 30 to 40% per annum at relatively low risk. So right now we are investing a lot in altcoins. We don't think Bitcoin is attractively valued at this stage. And later on, we're going to be probably even an arbitrage fund when the market turns.
Excellent. Okay. You want to take next?
Yes. Okay, I speak. Our fund is digital asset fund, is a quantitative fund, so we manage the huge increase of the price and the drop following drop, entering and exit from the market, reducing the volatility. So when the bubble will increase too much and then crash, probably this will happen in autumn. And for our point of view, we not only exit from the market, but we will short at least no more than 20-25% the market. We also use the carry trade technique that Désirée spoke before. So we don't sell the Bitcoin, but we sell the future. So we take care of the contango. We take advantage of the contango that is very huge today, and I suppose that the fund will have a great opportunity to demonstrate their value just when the crypto season will terminate, because till the Bitcoin will still have this huge dominance to the altcoin. Of course, when his cycle ended, all the crypto follow the Bitcoin sooner or later, like in 2017. So maybe I hope we'll not lose the 80% like in the previous bubble, but of course the drawdown could be very huge, and so the fund has the big opportunity to demonstrate that they have a great advantage related to the buy and hold directly the Bitcoin.
Excellent. And Tim, your thoughts?
Yeah, just quickly, we encourage our investors to take a longer term view. So even last weekend we saw Bitcoin drop from $63,000, and Bitcoin's only one asset, of course, but using that as an example, it dropped from 63 to I think 47,000 US, and which is a 20% plus correction, and so might that have been the end of the bull market? It doesn't appear so. It's come back. So we think the picking the ends of the cycles and the starts of cycles is very difficult. I do agree with you that markets have been cyclical, but we prefer to and recommend our investors to zoom out, take a 3-5 year time frame, and really the cyclicality will wash out. And a good example of that is we launched our fund in February 2018. Our unit price was down 65% in December 18. And we didn't have any redemptions, and all investors have stayed in the fund, and now they're 3 or 4x their initial investment.
Excellent. That's a pattern we're very familiar with at Block Asset Management. We followed something similar. I think just to add my comment is that I tend to agree with Michael Saylor, who's certainly been the evangelist for Bitcoin this year, and I think all of us can agree that he certainly added some new faces to the space, a lot of interest. But with the number of institutions that are, I believe, sat on the sidelines waiting to get in, I don't think that we'll see the same level of retracement that we saw in 2017 and previous years. I think we're in a totally different environment now to where we have been, and we've never seen so much institutional money either entering the space or waiting to enter the space at the right opportunities. So I think it is very, very different. I think we've got 1 or 2 minutes to go, so I'm just going to ask you all one final comment, and that will be, what advice would you give to any asset manager or family office looking to enter the digital asset space today? So if I can come to you, Désirée.
You're muted, Désirée.
Okay, thank you. So I'll answer first again. I think it's always good to try yourself. Take small money, try to open your own wallet, try to access a digital exchange to buy or sell tokens, make your own mistakes, find out how easy or difficult it is. And I guess most will find out that it takes too much time and resources. It's very complicated. People are afraid still of losing their pins to access their tokens. And maybe later on you decide to let a professional asset manager do the job. And maybe then you even decide for an actively managed fund like ours.
Excellent. And Daniele?
As I mentioned before, the advice is to invest between 2 and 5% in crypto assets. Of course, it's better active fund, but they can purchase ATP or directly. Is really complicated for an asset manager to custody and so on. But they can. I made also some presentation in YouTube. You can find me explaining just how can change a strategic asset allocation, just inserting homeopathic, I usually say, investment in crypto asset in the portfolio. So, of course, there is completely different respect the usually financial risk and return relation, because here is a risk opportunity. If you invested the 2% of crypto in your portfolio, in your asset allocation, you have a risk of 2% of maximum drawdown in the risk attribution, but you have probably 6 to 8% a year of performance attribution, given just with a small portion of investment. So is really important to have in this moment with a negative interest rate to invest a small portion of the asset of the clients in the crypto space.
Okay, great. So it's basically get off the fence and get invested. Okay, Tim, to finish.
Just quickly, I think my advice is don't overanalyze. I think there's always going to be 150 reasons not to invest in crypto. I think the topic of understanding what you're investing in is really interesting, but don't wait until you have a perfect knowledge of crypto, because it's probably not going to happen. I mean, I've been in the space a long time and I don't understand it perfectly, but we understand there's enough there. And yeah, don't wait for this perfect knowledge before you're making an investment decision. I think that over-analysis can lead to paralysis sometimes.
Excellent. Well, from my perspective, that's I'm out of questions, and I think we're out of time. I'd like personally, from Block Asset Management and from the team at Incrypted, to thank you very much for your time. Tim, particularly yourself, I know it's very late in Australia. Thank you very much. Go and enjoy a glass of wine or a beer.
Thanks, everyone.
Okay, I'm going to hand over back to any questions.
All right, awesome, guys. Thank you so much for telling us your take on how do we identify opportunities in terms of. And Tim, I'm gonna correct you. 8,000 is the wrong number on CoinMarketCap. It's 9,700, and it's going to go up. So I'm sure that picking projects is definitely one of the most important things. Everyone in the market at the moment is being referred to by someone saying, oh, hey, check out Reach, check out Cake, check out this. Although we got Cake's CTO here with us today as well. So, but the projects, they need to be deeply analyzed unless you don't know the team or the people personally and how good they were in delivering and shipping projects in the past. So thank you so much for giving all the options on how you can manage risk and how you can hedge, not just inside of crypto, but also Daniel gave a perspective of hedging outside of crypto as well. I hope the winter never comes. We